This is Adiello, one of our live funded traders. So his funded account was 25K at the beginning of this year. So on the 7th of Jan, he was allocated $25,000 to trade. And he's pretty much met his target. There was a couple of areas that were a concern, but let's sort of go through what was his overall stats. You can see all the way through, just there's a lot of consistency sort of in his trades. There's a lot of trades in just that. He sent this over, I believe, can't remember. So yes, he sent this over on the 11th of February. So just over 1 month worth of stats, but he's clocked up a significant amount of trades in total. Okay, let's just make sure it's all highlighted clearly. So if we're looking sort of at his end of period sort of P&L, so in total he's at $2,164, just above that. But that's obviously we've got to take off swaps and comps. Okay, swaps and comps that are allocated as well. So after swaps and net, he's closed $1,715 over that 1 month period. On a $25,000 account, that's not bad. That's not bad in a sort of a very short period of time. Still has a couple of sort of floating trades at the moment. I'll cover some of these key points that I wanted to stress in this. But yeah, for all of these trades he's taken, I would like to share sort of his equity curve. Luther, could you mute your microphone if that's okay, Luther? Let me just see if I could do it on my end. Okay, there we go. So if we come up to, let me just hide this for now, don't need that. Just zoom in, might be able to see it clearly. Okay, we've got a scale, so we know he's done around 137 trades. Okay, so he's clocked up 137 trades. He started off at 25K, which is in this region here. Right, so let's bring up a pen over here. Make sure. Okay, that's fine. So the blue line shows his equity curve. It shows his equity curve with each closing position. Okay, each closed position. At the same time, we have this yellow sort of dotted line or orange dotted line. That's determining his highest value. Okay, so that's the highest value he's achieved in his account. So assuming sort of we're in this region here where he's decided to have a bit of a drawdown, but the highest value achieved in his account stays the same. So that stays all the way through until he's able to sort of recover as he has quite clearly. Okay, but overall, sort of a nice uptrend. Okay, nice uptrend. The largest drawdowns you can see sort of in this region here. That was sort of one large dip there, and there's another one in this region here. Yeah, so 2 large dips over there. Now this line here is his trailing drawdown. Okay, so trailing drawdown, which means every time he meets a new high value, the highest value, right, the 4% is recalculated from this point. So it's recalculated from there, that's his 4%. Or it's recalculated from here, which is there. Okay, so every time sort of he meets a new highest value, that drawdown is recalculated. So it's 4% from that point over here. And you can see all the way through, even with a couple of large drawdowns as we've seen over here, he's nowhere near his trading drawdown. Yeah, so trading drawdown, again, that's moving sort of in an upward sort of fashion, in a sort of nice sort of uptrend over there, and stays away from his maximum sort of drawdown level. Yeah. Now, I often get asked, and I do reiterate this same concept, right? It's always good and well when you're making money. Yeah, so it's always good and well when you're making money, such as this. Yeah. The hardest part in trading is what do you do when you just hit a barrier? Where your equity curve just moves a little bit above, a little bit below, a little bit above, a little bit below. What do you do sort of in this region here? And also, what do you do when you face your drawdown? That's also extremely relevant as well. Okay, how do you manage yourself when you face that drawdown? Yeah, if I see sort of a large recovery such as this, then I would automatically assume that you allocated a much larger proportion of risk per trade to be able to sort of have that V-shaped pattern forming in your equity curve. But this shows sort of a clear and concise and consistency in his recovery from that drawdown. It's okay, we all face drawdowns. It's just how you manage yourself out of this drawdown. So get a nice sort of a smooth equity curve from that low point. Again, over here, with the drawdown taking place, and then a nice sort of clear consistency in his trading from around, what was that, 125, so between sort of 121 to down to 125. These are sort of the 4 or 5 trade losses he's had, and all of a sudden, from 125 up to about 137. That's his clear way of sort of coming out of the drawdown and sort of stepping over his meeting his target quite easily, right? Meeting his target quite easily. So if you want to define yourself as a trader, there's 2 areas you need to be concerned about. You don't want to be concerned about the sort of bull trend, right? So if I now sort of let's say this is the easy bit. So this blue line here, this sort of reaching, when it's on the up, you have strong confidence in yourself, you have conviction in your execution of trades, and it just goes hand in hand, and you start to see a large sort of incline taking place, right? So you see a very positive return taking place there. Again, sort of from this low over here. My mouse isn't so great when it's with this. Okay, again, all the way. So a nice bull uptrend, right? So those are not my areas of concern. My areas of concern, sort of what I discussed with him, was the yellow being sort of in this region from here to here. How he managed himself during this phase here. Yeah. What led him to sort of stay in this range, and that is between sort of 21 trades all the way up to about 45 trades. Okay, so that's just between sort of 20 to 25 trades where pretty much were either break even, a little bit positive, a little bit negative. He didn't make any headways in his in his equity growth there. Again, what I want him to do is evaluate market conditions. What was market conditions when you traded the first 20 trades, and thereafter the next 20 trades from 21 to 45? What was the market condition then? What changes did you make in your approach to trading your trade plan? Yeah. So again, that's something that I'd be concerned about, right? And then it may seem that just to get out of this, he might have taken larger risks to try and get out of this, larger positions. And that's why we see a bit of a large drop taking place in this region here. That's again sort of a red zone for me. Now, it's fantastic that he's come out of this, right? And he's done well. And that's what defines a trader, in my opinion. It's coming out of these drawdowns, right? And he's done it twice now. That's fantastic, right? But again, we want to analyze, those trades that occurred in this region here and why they occurred. Was it a quantitative or qualitative reasoning, right? Was it based on sort of, poor judgment? What were the factors behind it? So that's what we're trying to do sort of when we're sort of analyzing these types of statistics overall. But as you can see, very positive results. He's shown great consistency in his trades. Yeah. Now, if I scale that back, let's just come out a little bit. Let's just go down. This is his hit rate. Okay, these are his sort of total trades, positive, negative, whatever it might be. The majority of his trades are somewhere between, I would say, $50 all the way up to about $150 in this region here. Okay, so 147, that's 147 again, 169, yeah, so sort of in this region here. Okay, so that's the majority of his trades over here. He has a couple of outlier trades. Where he's taken much larger risk in those trades. Again, he could have saved himself and got to his target quite early on, and by just avoiding these types of mistakes, incurring these larger losses. And these large losses coincide with these dumps that we've seen here in his drawdown. Okay, so they coincide sort of with those two over there. So those will be sort of the negatives that I would want to highlight. Those will be the areas that I would want him to find a solution when we're reviewing his trading performance. Yeah. Now let's do something. Now, if we quickly, what I want to do is remove those 2 trades, right? So that's one there, and there should be another one somewhere down there. Well, okay, there we go. Zoom in. That gives you a much better representation of his actual trading. If we remove those two outlier trades, that's what we will see in regards to his P&L. The majority of his trades have been positive, so all the way through it's been positive. We've seen much larger winners, smaller losses. Again, we've got another one over here, but not a huge difference, $84. The next one thereafter is $56, and then $38, right? So the majority of his trades were quite small losses. A few were large, as we removed two of those large ones. But yeah, I mean, his winners are generally larger than his profits overall. That's the next thing that I will look at. The next key point will be is streaks of wins and losses, meaning, how many does he have back-to-back winners or losses, right? And, just looking at the losses first of all, that's not back-to-back. Yeah, it's one there. So there's a series of three. So he's had 3 losses in a row so far. That's the highest amount. One, no. So there's 2 there. Okay, moving through. Again, 2. There's 2 there. One's break even. Okay, there you go. So early on, he faced 3 sort of losses in a row. 3 losses in a row. And when I see these losses, what I want to see is, you have 1 loss, which is at your full capacity. You might have the second loss at the next sort of full capacity of your max risk limit, but the next one thereafter is reduced by half, or it's reduced by a certain proportion. And if you have another loss thereafter, again, that's reduced as well. Okay, and you can reduce that by the position sizing that you take per trade. We want to sort of see an upward slope. Okay, sort of being upward sloping. So you're taking less risk with each loss that you have in those streaks of losses. Yep. So overall, that's great. That's a great stat to have. He's had 3 losses in a row. That's the maximum losses that he's incurred in a row, right? I have removed those 2 outliers. Just be aware of that. Okay, so when we look at the winners, I mean, winners-wise, you could clearly see he's got quite a few winners. I mean, quite a few winners, especially back-to-back. You've got almost 13, 14, 15 trades in this region here. So almost 15 trades over here, back-to-back. A little group there, another group in this region, another sort of group over here. I think sort of this first early on trades that he had taken gave him that huge sort of push. And some of them were decent winners as well. So his streaks of wins are greater than his streaks of losses. That's another great stat to incur whilst you're trading, which shows consistency in your trading. And it's not a one-off. We can see sort of streaks of wins, throughout his trades in this region here, and the most recent trades as well. So great. That's another sort of good stat there. And that's sort of what I would be taking away from his P&L, right? Now, if we come back to this, minimize that, what I want to do is undo what I just did. Just 1 second. Okay. Okay, not don't worry about that too much. I'll save the old one. Okay, so when we're looking at lot sizes, this is just generally showing me what's the sort of average lot size he takes per trade. So again, somewhere in the region of, they're all under 0.5. They're all under 0.5. You've got some trades taking up much less, 0.1, 0.1, 0.1 in these regions here. So again, so what I want to do is I want to coincide that sort of with a sort of P&L over here. So when he's sort of in these trades over here taking much smaller lot sizes, that should be sort of reflected in here and his P&L as well. So just be wary of that. Each trader is going to face days where he doesn't feel as confident as the previous day, or he's come back from some losses. And the way to deal with that is to actually reduce your risk, reduce the lot size that you risk per trade, get some positive results under your belt, and then move on and then increase your risk as you progress. Okay, so there's no rush to taking all your trades at 0.5 lots or 0.45 in this case. He's taken his highest risk is 0.45. Except for those few early trades. But you're gonna be seeing this. What I don't want to see is a lot of sort of volatility in this. So from 0.5 he goes up to 1 lot, and then he's down at 0.1 and then back up to 1 lots, and so not too much variation there. But this is sort of good management of the amount of volume he allocates to his trades. The assets he's trading. Okay, so we know that he's taken he's taken 136 trades. Okay, so he's taken a total of 136 trades in just over a month and a few days, shall we say. So that's a great amount of trades that he's taken in that short period of time. So definitely sort of an intraday trader. I'm not going to, okay, so the majority of them, well, 70 of them are buy setups. The other were sell setups. 66 were sell setups. Okay, so that's pretty much balanced. It's pretty much balanced. Not much of a difference there. The assets he's focusing on, there are only 3 assets he's focusing on, and that's something that you must consider doing. Over a time period, start to filter down to just a select few assets and look for more trading opportunities throughout the trading day on a much lower time frame. Adiello is trading a 5-minute, 50-minute time frame. If you're around those time frames, look at less assets, but look at more trading opportunities, right? So, his most popular asset is cable. So if you think about it, the majority of his trades were on cable. That's his entire focus. You might look at a little bit of euro dollar, only 8 trades there. You might look at a little bit of dollar CAD, 16 trades. But his entire focus is on cable. Okay, so yeah, so that's sort of a clear focus there. And we just sort of, overall, max drawdown. What I might have to do is close this down. Let me just close this down. Don't save. I have this somewhere here. Let's open this up again. Let's give it a second. That includes those 2 outliers up. So his max loss, because of those 2 large losses he incurred, one of his max loss drawdown was at $412 in comparison to, do remember, this is a $25,000 account, okay, a live account as well, and he's still far away from his maximum trading drawdown. So even though he's had such a large loss on a single trade, if you work at it, you could still, maintain and recover from those losses with a maximum trading drawdown with that as well. But his max DD overall is 1.64%, so a negative 1.64%. So yeah, that sort of just gives you sort of overview of one of the traders' performance that I'd analyzed recently. These stats were created based on his account statement that he had sent over. I would want him to also do his trade blotter, his trade review document as well. And there's a lot more stats that we can take away from that. But this is just a quick synopsis of this trader's performance. And apart from those 2 outlier trades and the focus of making sure that those don't occur again, he could be in a much better position in the next upcoming month or month and a half when we do the next review session. But yeah, this just gives you sort of a good indication of what you should be looking to do in developing that consistency, especially sort of the risk parameters that we have defined in your trades. Yeah. Now, coming back to sort of equity curves, right? So it's a couple of things that you must sort of be aware of. You must sort of focus on. I'll come back to this. Let's zoom in a little bit more. Get a better picture of this. I should move up slightly. Okay. Where is that pen? Now, I can't remember the book. There is a book. It was a while ago since I read it. But one of the key, most instrumental parts from that book was that this person had worked for a number of institutions. We were talking about Goldman Sachs, JP Morgan, those types of institutions, right? And he had been their risk manager. He's been a risk manager for a number of traders for a period of 30 years of his career. Okay. And when sort of going through every trader's stats, there was one outlier. There was one stat that always reoccurred. Right? Which is, if I sort of just put in a sort of a pie, similar to this, and then we'll just sort of do something like that. So in the risk management sort of definition, the 80-20 rule. There's an 80-20 rule when it comes to what he defined of what makes and defines a trader. Yep. That 20% of your gains is going to come from only 20% of your trades. That doesn't look like a great two, but you know what I mean. So 80% of your gains will only come from 20% of your trades. Yeah. So it's actually natural when you occur markets like this, where you take a number of trades for a period of time, and you're not doing you're not making any headway in your equity curve. You're not making any headway in going on to sort of make a significant move in your equity curve. That's natural. That's going to occur. Do remember, this is all about probabilities. This is all about assessing the trade setup, applying the correct risk, and seeing how that performs. But you're not going to always find that you're taking, every single trade you take is going to have such a large gain, right? So if I just scroll this down, right, so come back to this region here. Let me just remove that. Yeah, so not all of your trades, right? So if you put it in sort of what the sort of average looks like when it comes to this sort of, you're going to be in this region here. Oh, that is not what I wanted to do. Try that again. Sort of in this region here. So the amount of, average returns has been sort of in this region here. These are sort of breakaways. These are sort of, fantastic when they occur. These are fantastic when they occur, when you have these outliers that occur, right? Where you make a significant amount of gain. Yeah. You need to be aware this is sort of, someone's mentioned Pareto's principle. It could be seen as that, quite similar to that. But this is what was defined after sort of 30 years of this person's experience as a risk manager, thriving through a number of, going through a significant amount of trade documents. He's realized that the 80% of gains that most traders make are from only 20% of their trades. So don't put so what does that mean? What should you look to do? Well, let's start with not putting too much emphasis on a single trade. Right? Start with that. Don't put too much emphasis on a single trade. Right? If one trade goes in your favor, great. If another trade goes against you, fine, move on. Let me focus on the next trade. That's how you should be focusing, right? It's not putting too much emphasis on a few or a single trade. The second key point is think about the longer term picture. Okay, think about the longer term picture. Look for trading opportunities that are in line with the longer term macro themes. Those are the ones that will turn out to be multi-baggers, shall we say? Yeah, where you sort of go on to achieve 5 to 1 or even more, even greater than that. Okay, so when you're looking for multi-baggers, you must be in line with the current theme, the current sort of fundamentals, in line with the current sentiment as well. All those things need to sort of align for that to be one of those outlier trades. Okay. And the next key point is, as I mentioned about, your goal is to survive, right? So if you think about the 80% of the time, the person is pretty much just surviving. 80% of the time, he's just surviving, right? He's just making a little bit, losing a little bit, making a little bit, losing a little bit, just going with it, going with a sort of, surviving through trading, right? 20% of the time, he's going to be thriving. He's going to be sort of making the most return that he could potentially make with that potential opportunity. Yeah. So you need to maximize that when that does occur, right? That might be a scaling in plan, scale into some of those positions that go in your favor. Okay. But yeah, that's sort of a key trivial point to trading. Okay, fantastic. That's it from me for now, guys. If you have any questions, please feel free to sort of send me a DM or put it into your mental group chat. And yeah, I'll catch up with you guys soon. Take care. Bye-bye.